Hi there, welcome once again to the Dukascopy TV studio here in Geneva. I'm Ben Jones. Back alongside me is Ron William, here to discuss the initial market reaction to Scotland voting no. Ron, once again, thank you very much for joining us.
Hi, it's a pleasure to be back.
So can you talk firstly about how the markets were reacting leading up to the vote and also after Scotland decided no as well?
Sure. Well, I've prepared three charts on one slide just so we can get a quick snapshot of what's happened to the UK currency markets, the sterling dollar, euro sterling, and then also the local stock market, the FTSE 100. And we do see sharp positive reactions on each of these markets. If we look at the cable, sterling dollar, we see a sharp move up on the back of this, which was extending a bounce that had already taken place a few days ago. Into the 20-day moving average with potentially a target in and around 167.80, that's the 50-day moving average. One thing I have highlighted on the cable chart is this value zone. It's a statistical measure of probability fair value in the market on this time frame. And we see that between 167, 169.30, this is the important value zone for overhead resistance that cable is likely to push up into. On the support side, we have 162.78, that's a Fibonacci level from a prior bull trend, and 160 psychological level and also a confluence level, 50% Fibonacci level. Euro sterling, of course, we have the inverse, sterling appreciation, but against the euro heading south. And what we have here is a breakdown into multi-month new lows on euro sterling, so quite significant historic move here. And the value zone here is between 80 on the high side and 79 on the low side. So these are the key significant moves on the currency markets. Looking at the bottom panel, we can see here the FTSE 100 local market snapping higher after roughly 9 days of down bearish price activity. So the market was kind of steadying in, maybe a little bit anxious ahead of this Scottish vote. And we can see here that there's been a positive reaction on the back of the no vote in the UK markets. So that's looking across the board. One last thing I'll mention on the FTSE 100 is the value zone for this market is in and around the previous peak levels of the FTSE 100, and that's between 68.90 and 67.50.
Okay, now that's obviously very specific for the initial market reaction to the Scotland referendum. So in a more general sense, can we look at sterling and the FTSE 100 as well? Yes,
sure. And I recommend to viewers to always, as much as possible, look at the big picture. It really does give a lot of historical credence to what might be happening in the market, even when we get these big political historic moves taking place. If we look at cable, and this is a sterling story across the board, sterling has been appreciating for almost 2 years. It's been a phenomenal move. But if we look at the historic picture of, let's say, sterling against the dollar, cable, what we see is this big 18-year price level, price ceiling at 170 to 167, this price zone, which has been very strong for so long. Now, the reaction to that zone, the market actually failed into this key overhead ceiling and dropped by 15% in just 2 months. So although we've had this positive move on cable, sterling positive against the dollar, it's been a blip on the chart, as we can see here in the red circle, as we're still within that 15% drop, having failed underneath this key ceiling at 160, 167. So sterling depreciation against the dollar, but also across the board.
Okay, and is the situation at all similar for the FTSE 100?
Yes, if we look at the FTSE 100, of course, this is the equity story. We can see that despite the sterling depreciation and fluctuations generally on the currency, the FTSE has maybe told a different story. It has been within this distribution top pattern, as we say in technical analysis, for roughly 9 months. So for the duration of pretty much most of this year of 2014, we've been doing nothing really. We've been stalling within this key pattern underneath a historic and psychological 7,000 level on the FTSE 100. That is also correlating with the 2008 global financial crisis there. You can see at the top there, we basically hit that kind of memory juncture for the chart price does have a memory, and we're still churning sideways. Now, my general view is, of course, this is a slowdown of what was a major cyclical recovery from 2009 after the financial crisis, and this potentially could be a sign of downside risk on the UK stock market, but European stock market and most Western stock markets at the moment. So I'm still holding that view. The key downside level based upon this trend line that I've drawn, this Gann trend line I've drawn, is 6,300 as a potential downside target over the coming few weeks and months as we hit that October seasonal weakness in the equity market.
Fantastic. Ron, once again, thank you very much for joining us today.
Thank you very much.
And thank you for watching. Do make sure you keep clicking back to Dukascopy TV, as we'll be bringing you plenty more updates and exclusive interviews. Bye for now.